Vantage Point with True North Wealth Partners is for our clients and those wanting to learn more about what's really going on within the markets and economy, as well as overall financial planning topics.
Hey everybody, welcome to Vantage Point with True North Wealth Partners. I'm Andy.
Eric Susi.
We're looking at October 22nd, episode number 49, right?
49. Trick or treat.
Yeah. Happy New Year. Into the end of the year.
Happy fall, New Year, a little bit of everything, right?
Yeah.
Dang.
Yeah. How you been?
Good. Yeah, it's been crazy. Family, parents stuff. But then I got a hall pass. My wife and family let me go away to the Talladega race. So 6 other guys and myself, we jumped into a Class A RV and drove down to the race over the weekend. So my voice is a little froggy. Sorry about that, but there's just screaming my boy on. Chase Briscoe, number 19 car, who used to drive for Tony Stewart last year, got released, but he won the race. It was great. Kyle Larson, the 5 car, ran out of gas last lap. It was something.
All right.
Good times. All righty.
Well, we didn't get any calls from the police. So
no. Yeah.
no bail money.
No Will Ferrell. Exactly. It's all good. Well, good to be with you all. Until another market recap. What's happened? What's fourth quarter? What we anticipate, and then sort of year-end, tax planning stuff we can touch on. Tricks of the month. So we'll go through it all. We'll pack a lot in 15, 20 minutes here. So I guess I better do my disclosures so everyone's happy here. So this information that we have has been obtained from a third-party sources or believed to be accurate, but we cannot guarantee its accuracy or completeness. Also, anytime we talk about products or asset classes, the following information is for general information only. It's not intended to be specific investment advice. It's important to consult a financial advisor who understands your individual financial situations prior to making any investment decisions. And when Andy and I talk about things, it's our beliefs, our opinion. We believe it's coming from us. Okay, so just want to hit all that. All right, let's rock and roll.
Yeah.
Talk about maybe just a general oversight of quarter earnings have been good. Heading into the third quarter here.
Yep.
It's going to be fourth quarter. The third quarter earnings have been good. So banks are blowing it out. Yeah. JP Morgan, as always.
Yeah, no doubt.
How many billions can they make in a quarter? Anyways.
Some good tailwinds.
Yeah. Yes, indeed. I guess let's talk about, just as a recap for folks, and Nathan, our producer, will hold this up, but talk about the quads. Remember Hedgeye and Sims, Stratus Investment Management, they use them as well. But just as a recap, where are we in the quad sector here? So quad 1's great. Okay, that's easy time. It's spring. Quad 2, summertime. Okay, growth is still going higher. Inflation's still elevated and higher. It's quad 2. It's still good. Quad 3 is fall. Okay, quad 3, growth is slowing. Inflation's higher. That's quad 3. It's called stagflation. You hear that word. Quad 4 is wintertime. Growth and inflation are both down. Batten down the hatches is about losing less. So that's sort of the quads, where the economic cycle always goes through cycles. They move around. So as a recap, quad 4 is what we were in at the beginning of the year in April. Okay, then we shifted to a quad 3. And this happens, we now shifted to a quad 2 in this quarter. And then guess what's coming in Q1 2026?
Quad 1.
Quad 1. Woohoo! Okay. So overall, things, yes, it's going to be bumpy. Volatility is going to be there, still with us. I have a chart on all that. With the tariffs, that still has to be unpacked and unreeled. And regarding to the shutdown, that's still going to filter through. On our calls, I'm hearing there still could go into mid-November, is what I'm hearing. So batten down the hatches, still going to get a little more volatile. But the upshot's this: the comps rate of change year over year, quarter over quarter, lends up to be a quad 1 in 2026. So get through the noise. It will go down, a little more volatility last 2 months, November, December, and then it'll pick back up. So I did want to point that out as far as what's coming. In addition, and Andy and I have gone through this, and Stratus, Sim, and they have this as well. And Nathan will hold us up, the monthly nowcast inflation. So this will be coming out. The Fed government opened up departments of the government to put together the CPI inflation, because they have to do this for the Social Security, which they calculate here at the end of October. So we have a projection for that as well. But the upshot is the nowcast coming out October 24th, here in a couple of days, is roughly north of 3%, roughly 3.10. So there's a high, a medium, and a low forecast, but 3.10 is what expected to be for the CPI coming out for last month, okay? And then the other one, the nowcast, again, Nathan, or hold us up. This is for what's going to be the following month, okay, November. So it's going to go tick down to 3.02. So we've seen that in the gas pumps prices, 4-year lows, all that stuff. But the point is, so temporary spike up over 3 and then covering back down to around 3. And it's going to be upper 2s, low 3s for the foreseeable future is what's anticipated. So nothing crazy, not 8 or 9% like it was in the past, but it's going to be sticky and elevated. Okay. That's that.
And when tariffs really haven't had too much of an impact on
that. Again, it hasn't been fully,
little pockets maybe.
You got it. Yep. All right. Anything else on what you got going on?
Yeah, we're talking about with the volatility in the markets, being there still, but not what it was.
Right.
So a lot of cash and money markets.
How much is there now?
Yeah, so just south of $8 trillion.
Oh, geez, that's a lot.
Yeah. So as of October 20th, it was 7. Wait, where is it? 7.37 trillion. Money market.
Okay. Yeah.
So we use
that's the highest, right? Is that the most
ever?
Yeah. So
in history. Yeah. So Schwab's. So we obviously use Schwab's money market, the Value Advantage SWXX or SWVXX. So it has 383 billion.
Wow.
So it's a big one, and it's actually it was paying. It came down. It was like 3.8. It's back up to 4 right now. So not bad.
Yeah,
Based on 7-day yields, every 7 days it resets slightly.
Yeah,
so that'd be coming down.
Right.
So money markets won't be as attractive.
Right. And that's potential. What? Maybe as Fed cuts rates, maybe push a little money in off the sidelines to help the markets possibly.
That's right.
What's that Santa Claus rally? Huh?
Yeah, that'd be great.
Yeah.
That'd be great.
All righty.
Like
ho, ho, ho. And that's my birthday time, right?
Yeah, that's right. You are a Christmas baby.
Yeah, all right. It's all good. Cool. All right. Well, that's good insight. Yeah, for sure. And I think mergers and acquisitions ticked up a little bit.
Yeah, that's good. Another tailwind, right?
Yeah, no, for sure. So that's M&As. Here's a little from FactSet. Came out October 21st. And with that, there's a little tick up in M&A, a little graph there for you. Yeah. So Nathan, our producer, will hold that. But that's good. You want to see M&A. We talked about that earlier, as things will come together. And that's why the funds we use have done well. And Study Eddie. And,
that next point.
Yeah.
That's a great merger and acquisition.
Oh,
fund,
yeah.
So
been using that for a while.
That's a good alternative to coming out of a money market, kind of tiptoeing in the market a little
bit. Yep.
Risk wise.
Yeah.
I
hear you on that. Good. Anything else on that before we get to tips of the month? Or
just thinking through, end of the year stuff. Probably flows into
tips of the month. Okay.
Tips of the month. We have RMDs. Obviously, we have a lot of them set up to go out December 1.
RMDs, required minimum distributions.
Yeah. Then also a popular strategy for charitable clients would be what they call a qualified charitable distribution. So you can actually take your RMD amount doesn't have to be RMD out of your IRA account and give it directly to a charity as long as it's a 501c3 organization. You do not pay taxes on that money. So if I usually give like $5,000 to a charity or my church, I can have it come right on my retirement account without being taxed on it.
It's beautiful. Yeah, we've done that, and keep that in mind, folks. I believe it's over 70.5, or once it's eligibility.
Yeah, you can start at 70.5. That's
70
right. Yeah.
Right.
So 73 right now is the required age. Right. Probably going to be 75.
Yes.
Before too long. So,
right.
So that, and then you have end of the year, just open enrollment, right?
Yep.
So if clients out, if you have, new benefits, new options reach out to us. If you need some advice or input, we'd be happy to help you with that. So,
I think our partner we use, Mike Terry, too. Yeah. So open enrollment's coming up here. So Medicare, we're in it. So reach out to us if you need it. But for a lot of our clients to utilize him, so reach out to get different eyes, review everything, because the drug program has changed and things change. You hear doctors in and out of networks and shutting down.
Yeah, right.
MMO was great one year, now it's not, and
yeah,
Medical Mutual, that is. Very good, yeah. And then how about we were talking earlier, what's AI has evolved and it's have safety. Like we have a code word for my daughters and things, so I drop everything if they ever text or say this code word. But what is it for, the financial side of things?
Yeah. So a lot as AI evolves and becomes more real, I guess, or real in appearance, there have been instances where just scams, right? Like financial scams have always been popular. And so there have been instances where AI can mimic kind of the voice of a relative. So like, like my kid gets a call, or my mom or dad gets a call from my son that sounds like him, and it picks up on information that's real in his life. And he might, hey, I need, can you send me $5,000 or whatever? And so it's easy to get caught up in that. And so the recommendation is that as a family, you would have kind of like a safe word when it comes to financial. So like if you get that inquiry from a grandkid or a kid or someone, you can say, hey, what's the word?
Right.
And if they know it, it's legit. If not, then it's a scam. So
it's a great idea.
Just something simple like that.
Yeah, use that, folks, because there's AI is augmenting everything, and it's a little. Some of it's good, but a lot of it's bad too.
Yeah, right. Yeah.
And how about our favorite? The meme ETF? There's a lot of action this week in the meme themes.
Your favorite? I know you eat a lot Beyond Meat.
Beyond Meat, yeah, right.
What is this stuff?
Yeah, I think that stock's well over 600% year to date, a week to date, or something crazy. Yeah. That's crazy. So, GameStop.
Yeah.
Anyway, so those are the high flyers. That just pumps and dumps, and that creates a lot of froth in the markets. And speaking of froth, I mean, gold.
Yeah.
We've been, it's part of the commodities, and we've been using that for a while. But it's popped up, and it's done great, or 4,300 an ounce, or 4,300.
Yeah.
And then it lowered yesterday, like over 5%. So that's the biggest drop in years for gold was yesterday. Yeah. But that's some of the froth. You need we have a chart on that as well. But
yeah, definitely.
No, I hear you. So keep us in mind. A lot of tips of the month there. We can help you through open enrollments, things, benefits, 401ks, resetting. Yeah. Try to match
contributions.
Just max out and do as best you can through your work employer. Best way to grow your account, DCAs, dollar cost average as you get paid.
Yeah, that's right.
All righty. Well, let's end on some charts. There's a lot of good stuff here. Just to recap, as the year has progressed, a lot of things have developed and moved. So again, Nathan will hold these up as we blow through them here. But let's start out with the VIX, the volatility of the market for the CBOE, the VIX volatility. The average is 18.3. All it means is that we're forecasting out for the next 30 days. What does the VIX players and the index options traders think the market will do? It spiked up, you can see last week, in the mid-20s, and right now, as of yesterday, it was at 17.9. So 17.9, slightly below the 18.3 national average there, or average since 2010. Okay, the next is this stock market valuations, S&P 500. A year ago versus, I've been tracking this since 2003, and this is 2 standard deviations. So most of them today is the little diamond shape versus a year ago is a red X. So everything's well beyond 2 standard deviations. So everything is frothy and elevated. So we do anticipate, market pullbacks, which is common. So just wanted to give you a heads up on that. Stock market PE ratio, currently it's 22.7. Historical average is 15.9. And we're getting back to where it was, where the virus in 2020, it was near a little bit higher than that. And then obviously the tech bubble peak of 24.5 was all-time high. But again, you're going to have that here in ebb and flow. Stock market all-time high. Remember we talked about earlier this year when you start getting 1 or 2, typically you're on a roll. So we've had 33 all-time highs for the S&P 500 year to date so far, again, through yesterday's closing price. So 33 last year was 57. So again, all-time highs you're going to have those.
Yeah, you want them.
Yeah. Pullbacks, that's common. 5% pullbacks in the S&P. Again, the national average is, it's 4.6 times per year. You're going to have 4.6, let's just call it 5 times a year. You're going to have a pullback of 5% or more in the S&P 500. Well, what do we have? 5 times we've had pullbacks of 5% or more. So spot on, we're right there on the average. Okay. We could have one more sneak in between now and end of the year, but that's common. A 10% pullback. Okay, the average is 1.2 times per year. We've had 2 10% pullbacks per year, so a little bit more. We had 0 last year. We had 2 this year of 10% pullbacks in the S&P. Earnings growth rate for the S&P. Okay, you can see it's right now, the average, historical average is 7.7. Right now, we're about 11.1. So a higher than historical average, which is great. But then the earnings, GDP, still elevated, again, north of 0. If it's 0 or below, that's where you start going into a recession. We still do not see a recession, just market volatility. and things ebb and flowing. But third quarter GDPs, in the low threes, let's call it, upper twos, but fourth quarter as well. And then projecting out, I think you said earlier, still looking good,
Positive,
right?
Yeah. And all the way through to all next year.
Okay.
Yep.
So that's GDP, again, projections of where we're at. Bond market volatility, it's called the MOVE index. So the VIX is for the equities. The bond market has called the MOVE index. The average is 87. Right now we're at 77. We did have a spike in that a couple weeks back, and that's when the markets were flubbing around a little bit. But so that's a historical. It's a precursor to what to come. So we watch the bond market MOVE index because that goes first before the VIX tips off. So that's why I learned that at T. Rowe Price in the trading pits from them. And then 2-year, 10-year recessions are shaded, but the 2-year, 10-year was negative for almost 2 years. Now we're positive. The spread between the 2-year, 10-year, it's 0.53, so that's good. The average spread is 0.84, so it'd be nice if it got a little bit wider on the yield curve steepness. But as the Fed starts to cut rates in the short end, that will naturally bring the steepness up on the long end. And then leading economic indicators, so this is a joke, but a dozen or 15 or so leading economic indicators, well, they've been negative for going close to 3 years now, and still haven't called a recession, quote unquote, but it is what it is. So let's keep an eye on that. CPI, Consumer Price Index, we talked about that. Now CPI has gone down lower, now heading back up, a little bit. Gold, this is a key one here. So again, gold, you can see how it's done over the years, 2010, 2015, a lull there for about 5 years or so for a while. And then 2020 went up and then lull again, and then it just spiked up the past 3 years or so. So we've had that for a play on for a while, and then you can see just gold went berserk, and then yesterday it did deflate a little bit, about 5%, but it's all part of it. Mortgage rates, finally, mortgage rates have come down. So that's helped the refi boost. So my brother is in the mortgage industry, and he said, the past few weeks they've had a spike up in volume instead of like 120, 150 a day, and it's been like 275 a day. So still pathetic. Used to be in the thousands, wow. But you can see the interest rates, mortgage rates have come down to around 6.3%, and then Social Security went on that. So Social Security estimate is about 2.6%. They're going to finalize that here in October, and then they'll come out with a hard number, and then we'll see where it lines up compared to last year. But that's Social Security increase for next year. So hopefully it'll be in around that 2.6%, give or take. So that's it for the charts and the updates there. But we covered a lot. Again, any questions, happy fall, enjoy the holidays. We appreciate you. Reach out to us. Reviews, you can do webinar reviews, on phone call reviews, in person, whatever you prefer. And, we're here for you, and we appreciate you.
Yeah, definitely.
All right. Enjoy.
Right. See you guys.
Take care.
You can reach this episode on our website at mytruenorthwp.com, by other podcast venue sites, or by calling us at 614-929-2715. Also, feel free to share this episode with friends and family and sign up for our weekly email market updates via our website. Investment advice offered through Stratus Wealth Advisors, LLC, a registered investment advisor. Stratus Wealth Advisors, LLC, and True North Wealth Partners are separate entities. Opinions expressed in this podcast are for general information only and are not intended to be specific investment advice. It is important to consult a financial advisor who understands your individual financial situation prior to making any investment decisions. Some of the information contained herein has been obtained from third-party sources which are believed to be accurate, but we cannot guarantee its accuracy or completeness. The information should not be regarded as a complete analysis of the subjects discussed.